Welcome back to Investing Talk Podcast.
Yeah, earnings reports, they're like a financial checkup for companies.
And those reports can really make or break a stock.
They can.
So we're focusing on companies with earnings releases that could really shake things up.
We're going to break down the numbers, analyze the trends, and uncover the potential risks.
Sounds good.
Yeah.
Harmony Gold Mining.
Ticker symbol HMY.
Now, gold has been on a tear lately, reaching a dazzling $2,437 per ounce.
You'd think that'd be great for gold miners.
Yeah.
But Harmony Gold is a high-cost gold producer.
So while a surging gold price is generally positive, Harmony Gold needs to manage its expenses carefully.
Exactly, and that's what makes their upcoming earnings report so interesting.
They're projecting an increase in headline earnings per share, HEPS.
For the 6 months ending December 31st, 2024, a potential jump of 24 to 42%.
So what's driving this projected growth?
It's a combination of factors. The 28% rise in gold prices is definitely a major tailwind, but they're also grappling with increased operating costs.
So it's a tug-of-war between rising gold prices and rising costs, and to add another layer, their stock has dipped recently.
It could be due to investors taking profits or concerns about Harmony Gold's ability to manage its costs.
So what should listeners be paying close attention to in Harmony Gold's earnings report?
Keep an eye on their all-in sustaining costs, or AISC.
Okay, and beyond AISC, what other key metrics should investors be watching?
Definitely HEPS to see if they meet or exceed those growth projections. Also pay attention to their production guidance for the coming year.
Great points.
Thanks.
Now let's shift gears from gold mines to the retail world.
Okay, sounds good.
GAP ticker symbol, GAP.
This company has a knack for exceeding earnings expectations. They've consistently been beating EPS forecasts.
And speaking of streamlining, they recently rebranded with a new ticker symbol, GAP.
That's an interesting observation. It's definitely worth keeping an eye on.
Analysts at Benart Research are particularly bullish on GAP.
They're predicting strong growth for the retail industry and have set a price target of $485 for GAP.
Wow, that's quite a target.
It is.
What should we be watching specifically in GAP's earnings report?
Keep a close eye on EPS to see if they continue their trend of exceeding expectations. Revenue growth is another key metric.
Okay, and let's not forget that the retail landscape is intensely competitive.
Absolutely. Fast fashion retailers are nipping at their heels, and online giants are constantly vying for market share.
And with that, let's move on to a company that's been defying the retail odds, Abercrombie & Fitch.
Ticker symbol ANF.
They've been on a tear lately.
Yeah, they have.
Consistently surpassing EPS estimates.
Right.
And showcasing their operational strength and brand momentum.
It's quite a turnaround story.
The results speak for themselves. They've been reporting strong double-digit revenue growth fueled by the resurgence of their Abercrombie and Hollister brands.
That upward revision is definitely a positive sign, but it's important to note that it also signals a potential moderation in their growth rate.
Okay, so a potential slowdown in growth is something to keep in mind.
It is.
But let's talk about their valuation.
Sure.
Abercrombie & Fitch seems to be trading at a discount compared to its growth potential.
Their price-to-earnings ratio, or P/E, currently stands at 12.04.
Okay, break it down for us.
Okay, so essentially these valuation metrics suggest that Abercrombie & Fitch's stock might be undervalued relative to its earnings and growth trajectory.
So listeners, if you're looking for a potential bargain in the retail space, Abercrombie & Fitch is definitely worth a closer look.
Yeah, I'd agree with that.
But what should we be focusing on in their upcoming earnings report?
Pay close attention to same-store sales growth. Also keep an eye on margin expansion.
Got it. Same-store sales and margin expansion are key metrics to watch. And let's not forget about the competitive landscape.
Exactly. Rivals like Lululemon and American Eagle are also strong contenders in the apparel market.
Now, let's turn our attention to a company that's been on a roller coaster ride, Victoria's Secret & Co.
Ticker symbol VSCO.
They've faced their fair share of challenges in recent years.
They have.
But there are glimmers of hope for a potential turnaround.
I'd say so.
They've been consistently exceeding EPS estimates, which suggests their operational improvements are starting to pay off.
That's true.
But let's not get ahead of ourselves.
Oh, okay.
While they're exceeding earnings expectations, their revenue has been relatively stagnant.
Yeah, that's right.
Speaking of turning heads, they brought back the iconic Victoria's Secret fashion show in October 2024.
It's a gamble.
Do you think it was a step in the right direction?
Not to say for sure.
Can they make it relevant for a new generation of consumers?
That's the million-dollar question. The upcoming Q4 earnings report will give us some clues.
Okay, so the Q4 report will be a key indicator of their progress.
I think so.
But let's talk about their valuation.
Sure.
They're currently trading at a low price-to-earnings ratio.
Which suggests potential undervaluation, but it's important to consider their price/earnings-to-growth ratio as well. Their PEG ratio is relatively high.
So it's a mixed bag.
It is.
Investors need to carefully weigh the potential for a turnaround against the challenges they still face.
Yeah.
What are the key metrics we should be watching for in their earnings report?
Definitely keep an eye on EPSQ. For revenue will be crucial. Gross margins will tell us if they're becoming more profitable, and their 2025 guidance will give us a sense of their own confidence.
Got it. EPSQ, 4 revenue gross margins, and 2025 guidance are on our radar for Victoria's Secret.
Yep.
But let's not sugarcoat the risks.
No, we can't do that.
They're facing intense competition from other lingerie and apparel brands.
Right.
Right, for our final stop today, we're heading to Nordstrom.
Ticker symbol JWN.
This high-end department store chain is known for its curated selection of designer brands.
They're not immune to the challenges facing the retail industry.
Sounds like they're pulling out all the stops to stay relevant.
They are.
But the big question is, are these efforts paying off?
That's what we'll be looking for in their upcoming earnings report.
Okay, so the pressure is on for Nordstrom to show that they're adapting effectively to the changing retail landscape. What are the key metrics we should be focusing on in their earnings report?
Let's start with the usual suspects, EPS and revenue growth.
Right, but beyond those top-line numbers, what else should investors be paying attention to?
Comparable sales will be crucial.
And to gauge their digital progress, we'll be looking at online sales growth.
Right.
And to assess their operational efficiency, pay attention to their gross margin and inventory turnover.
Those are all good ones.
Okay, so we've got EPS, revenue growth, comparable sales, online sales growth, gross margin, and inventory turnover on our radar for Nordstrom. Anything else?
Don't forget about their guidance for the coming year.
Got it. Guidance is always an important factor to consider. Now, before we wrap up our discussion of Nordstrom, I want to touch on something we mentioned earlier, the changing demographics of their customer base.
Yeah, their core customer base is aging, and they need to find ways to attract younger shoppers.
Exactly. Millennials and Gen Z have different shopping habits.
They do.
So it's not just about staying ahead of the competition, it's also about staying relevant to a changing consumer landscape. Well, we've covered a lot of ground today, diving into 5 companies with earnings reports that could have a significant impact on the market.
It's going to be an exciting week, and we'll be back next time to break down the results and what it all means for investors.
Until then, stay tuned for more insightful discussions on Investing Talk podcast.
Let's circle back to Nordstrom for a second. You know, their reputation for customer service, it's a major differentiator.
Yeah, they've built a loyal following
They have.
by providing personalized attention.
Exactly. That kind of customer-centric approach, you know, it's hard to replicate online.
It is.
And they've been smart about integrating that personal touch into their digital channels as well, like offering virtual styling appointments.
It's a smart move because people still want that human connection, but maintaining that high level of service while scaling their online operations.
Yeah.
That's a challenge.
It is a challenge, and that brings us to another key factor investors are watching.
Inventory management.
Exactly. They need to strike that balance, you know?
Right, because having the right products in stock
Yes.
at the right time,
Right.
it's crucial,
It is crucial, and those markdowns can really eat into profits.
especially in the luxury market.
Exactly.
Yeah.
So we'll be looking closely at Nordstrom's inventory levels
Okay.
and turnover rates in their upcoming earnings report.
And of course, we can't ignore the macroeconomic environment.
Right. Inflation, rising interest rates,
Yeah.
recessionary fears, you know?
All impact consumer spending.
Absolutely.
So Nordstrom's success is not entirely within their control.
Not entirely, no.
So let's put it all together. How might the upcoming earnings report influence Nordstrom's stock price?
Okay, well, if they deliver strong earnings and beat expectations on revenue,
Okay.
provide a positive outlook for the coming year, you know, it could send a signal to the market that they're navigating these challenges effectively.
Makes sense.
Yeah.
But what if the report disappoints? What if their earnings fall short of expectations?
Then we could see a sell-off, and earlier, investors might lose faith.
So it's a high-stakes game for Nordstrom.
It is.
Now, before we move on from Nordstrom, I want to highlight one more thing that I thought was interesting.
Okay.
They've been making strides in sustainability.
Yeah, that's a great point. Consumers are more conscious than ever.
Exactly. Nordstrom has been implementing initiatives to reduce their environmental footprint.
It's a smart strategy, by embracing sustainability and inclusivity.
Okay, let's shift gears now
Okay.
and talk about a company in a completely different industry. Harmony Gold Mining, ticker symbol HMY.
As we discussed earlier, gold prices have been on a tear.
But Harmony Gold is a high-cost producer,
Right.
so they need to be extra efficient to capitalize on those price surges.
Exactly, and that's what makes their upcoming earnings report so interesting.
Now, one of the things that makes Harmony Gold unique is their focus on South Africa.
Right. South Africa is a major gold-producing country.
But it also comes with its own set of risks.
It does.
Like what?
Well, South Africa has a history of political instability,
Uh-huh.
labor unrest, which can disrupt mining operations.
So Harmony Gold needs to navigate these challenges
They do.
to maintain consistent production.
Absolutely. Investors will be looking for signs that the company is managing these risks effectively.
Now let's talk about their production. Are they meeting their targets?
Their production levels will be a key focus in the earnings report.
And what about their costs? We talked earlier about their high-cost structure.
Right. They're implementing a multi-pronged strategy.
Yeah.
One is improving operational efficiency.
That makes sense. If they can produce more gold with fewer resources, it can help offset those higher costs.
Exactly. Another strategy is exploring new mining techniques.
So they're embracing innovation.
They are, and they're also looking at potential acquisitions or joint ventures.
That's a common strategy in the mining industry.
It is.
But acquisitions can also be risky.
They can be very risky.
All right, so we've got operational efficiency, new technologies, and potential acquisitions. What other factors are influencing Harmony Gold's stock price?
Well, as with any mining company, commodity prices play a huge role.
So even if Harmony Gold is doing everything right, a sudden drop in gold prices could still hurt their bottom line.
That's right. It's a reminder that investing in mining companies comes with inherent risks.
And then there's the political and regulatory environment in South Africa.
Absolutely. We talked earlier about the challenges of operating in South Africa.
What specific political or regulatory factors could impact Harmony Gold?
Well, there's always the risk of resource nationalization.
All right.
There are also concerns about regulatory changes that could increase costs.
So investors need to be aware of the political and regulatory risks.
They do.
Now, despite these risks, Harmony Gold has also attracted some bullish investors.
They have.
What's driving their optimism?
Well, some investors believe that Harmony Gold is undervalued, especially when you consider the potential upside if gold prices continue to rise.
So if you believe gold is going to go higher,
Right.
then investing in a gold miner like Harmony Gold could be a way to amplify those gains.
Exactly. And some investors are impressed with Harmony Gold's management team.
Okay, so it's a bet on the company's ability to execute its strategy and create value for shareholders, even in a complex and risky environment.
That's right. But as with any investment, it's essential to weigh the potential rewards against the risks.
All right, let's move on from Harmony Gold and talk about another company that's been making headlines. Gap, ticker symbol GAP.
Gap is an iconic American retailer that's been around for decades.
But they've been struggling in recent years to keep up with the changing retail landscape.
They've been facing some stiff competition from fast fashion retailers like H&M and Zara, as well as online giants like Amazon.
So they're facing challenges on multiple fronts. What are they doing to try and turn things around?
Well, they've been trying to revitalize their brands by updating their styles, collaborating with celebrities and influencers.
So they're trying to modernize their image.
They are, and they've also been investing in their online presence.
Right. They need to provide a seamless shopping experience across all channels.
Absolutely, and they've been closing underperforming stores.
That's a tough decision.
It is.
Now, they did have some bright spots recently, didn't they?
They did.
Specifically with their Old Navy brand.
Old Navy has been a consistent performer for Gap.
So they've got one brand that's doing well,
Right.
but they need to figure out how to replicate that success with their other brands.
That's the key now. In addition to competition and brand relevance, Gap has also been grappling with operational challenges.
What kind of operational challenges?
One issue has been inventory management.
Yeah, we talked about that earlier. With Nordstrom, inventory management is crucial in retail.
It is, and they've also faced supply chain disruptions.
Those supply chain issues have been a headache for a lot of companies.
Yeah.
So Gap has a lot on its plate. What are they doing to try and turn things around?
Well, they've been making some strategic moves. One is closing underperforming stores.
Okay.
They've been shutting down locations that aren't profitable.
That's a tough decision, but sometimes it's necessary.
It is, and they've also been investing in their online presence.
That's essential in today's world.
It is.
Consumers expect a seamless online experience.
Exactly, and they've been experimenting with new store formats.
So they're trying to find ways to make their stores more appealing.
They are, and they've been trying to differentiate their brands.
So instead of trying to be everything to everyone, they're focusing on what each brand does best.
Precisely now, whether these efforts will be enough to revive Gap's fortunes remains to be seen.
Right, it's a highly competitive industry,
It is.
but they are taking steps to address their challenges.
They are, and they do have some valuable assets, including their brand recognition.
Okay, let's dive into the key metrics that investors should be watching in Gap's upcoming earnings report.
Sure, first and foremost, keep an eye on earnings per share, or EPS.
Right, and along with EPS, we're looking at revenue growth.
Exactly.
Yeah.
Then we've got comparable sales, those same-store sales we talked about earlier.
And to gauge their digital progress, we're focusing on digital sales growth.
Those are key questions. And to assess their operational efficiency, pay attention to gross margin and inventory turnover.
And lastly, let's not forget about guidance.
Exactly. Now, what are some specific things that could impact Gap's stock price after the earnings report?
Well, if they deliver strong earnings, beat expectations, and provide a positive outlook, it could signal to the market that their turnaround efforts are gaining traction.
Right. Conversely, if they miss earnings estimates, report weak sales, or express concerns about the future, investors might lose confidence.
So it's a high-stakes game.
It is now, in addition to the financial metrics, there are a few other things that could influence Gap's stock price.
Like what?
Well, any news about strategic initiatives or partnerships could move the stock.
Makes sense. And conversely, any negative news like store closures or executive departures could have the opposite effect.
Absolutely. And then there's always the broader market environment to consider.
So it's a complex equation with many variables at play.
It is, but by understanding the key metrics, the company's strategy, and the broader market context, investors can make more informed decisions.
Great insights. Now let's move on to another company that's been making waves in the retail world. Abercrombie & Fitch, ticker symbol ANF.
Abercrombie & Fitch is a specialty retailer that targets teenagers and young adults with its Abercrombie & Fitch and Hollister brands.
They've been on a roll lately, haven't they?
They have. They've been reporting strong sales and earnings growth, and their stock has been performing well.
What's been driving their success?
Well, they've been doing a few things, right? One is product innovation.
Okay.
They've been updating their styles and offering more on-trend clothing that appeals to their target market.
So they're keeping up with the times.
They are, and they've also been focusing on customer experience.
Customer experience is crucial in today's competitive retail environment.
It is, and they've been managing their inventory well.
That's important for maintaining profitability.
Absolutely. Now, despite their recent success, Abercrombie & Fitch still faces some challenges.
Like what?
Well, one challenge is the fickle nature of their target market. Teenagers and young adults are notoriously trend-driven, and their tastes can change quickly.
So Abercrombie & Fitch needs to stay agile.
They do, and they also face competition from fast fashion retailers and online giants.
Yeah, those are formidable competitors.
They are, and then there's always the risk of economic slowdown.
So they're not immune to macroeconomic factors.
They're not. Now let's talk about their valuation. Abercrombie & Fitch's stock has been performing well, but some analysts believe it might be getting a bit pricey.
What are they looking at?
They're looking at metrics like the price-to-earnings ratio,
Okay.
or P/E ratio, and the price-to-sales ratio, or P/S ratio.
What are those ratios telling them?
Well, Abercrombie & Fitch's ratios are higher than some of its peers.
Okay, so there's a certain level of optimism baked into the stock price.
There is now. Whether that optimism is justified remains to be seen.
Okay, so what are the key metrics to watch in their upcoming earnings report?
Well, as always, earnings per share and revenue growth are crucial.
Right.
But beyond the top-line numbers, it's important to look at comparable sales or same-store sales.
And to gauge their digital progress, we're focusing on online sales growth.
Those are key questions, and to assess their operational efficiency, pay attention to gross margin and inventory turnover.
And lastly, let's not forget about guidance.
Exactly. Now, what are some specific things that could impact Abercrombie & Fitch's stock price after the earnings report?
Well, if they deliver strong earnings, beat expectations, and provide a positive outlook, it could further boost investor confidence.
Right, but if they miss earnings estimates, report weak sales, or express concerns about the future, investors might start to question their growth story.
So it's a delicate balance.
It is now, in addition to the financial metrics, any news about strategic initiatives or partnerships could also move the stock.
For example, if they announce a major expansion into new markets
Exactly.
or a significant investment in their online platform.
Right, and conversely, any negative news like store closures or executive departures could have the opposite effect.
And then there's always the broader market environment to consider.
Absolutely. It's a complex situation with many factors at play.
Okay, so we've covered a lot of ground on Abercrombie and Fitch. Let's move on to our next company, Victoria's Secret ticker symbol VSCO.
Victoria's Secret is a well-known lingerie and beauty retailer that's been through a lot of changes in recent years.
Right, they've been trying to reinvent themselves and appeal to a broader audience.
One of the key initiatives has been to move away from the overly sexualized image that they were known for in the past.
So they're trying to modernize their brand.
They are, and they've also been expanding their product offerings beyond lingerie.
So they're trying to diversify their revenue streams.
Exactly. Now, despite these efforts, Victoria's Secret still faces some headwinds.
Like when?
Well, competition is fierce in the lingerie and beauty space.
Okay.
They're up against established players like Airy Third Love and Savage X Fenty.
So they need to find a way to stand out in a crowded market.
They do, and they also need to address their past image problems.
Right, they need to rebuild trust.
They do. Now let's talk about their financial performance. Victoria's Secret has been struggling financially in recent years.
What's been driving those financial struggles?
Well, part of it is the competition we talked about.
Okay.
They're losing market share to other brands, and part of it is their own missteps.
So they need to get back to basics.
They do now. Despite the challenges, Victoria's Secret still has some valuable assets.
Like what?
Well, they have strong brand recognition.
Okay.
Even though their image has taken a hit, the Victoria's Secret name is still well known globally, and they have a large and loyal customer base.
So there's potential for a turnaround.
There is now. Let's talk about what investors should be watching for in their upcoming earnings report.
Okay, so what are the key metrics?
Well, as with any retailer, we're looking at earnings per share and revenue growth.
But beyond the top-line numbers, it's important to look at comparable sales or same-store sales.
And to assess their digital progress, we're focusing on online sales growth.
And to evaluate their operational efficiency, pay attention to gross margin and inventory turnover.
And lastly, don't forget about guidance.
Now, what are some specific things that could impact Victoria's Secret's stock price after the earnings report?
Well, if they deliver strong earnings beat expectations and provide a positive outlook, it could signal to the market that their turnaround efforts are starting to bear fruit.
That could boost investor confidence.
Right. But if they miss earnings estimates, report weak sales, or express concerns about the future, investors might lose faith in their ability to stage a comeback.
Now, in addition to the financial metrics, any news about strategic initiatives or partnerships could also move the stock.
Exactly, and conversely, any negative news like store closures or executive departures could have the opposite effect.
And then there's always the broader market environment to consider.
Absolutely.
Huh.
So it's a complex situation with many factors at play.
All right, let's wrap up our discussion of Victoria's Secret and move on to our final company for today. Nordstrom, ticker symbol JWN.
Nordstrom is a high-end department store chain that's known for its wide selection of designer brands, its exceptional customer service, and its upscale shopping experience.
But like many traditional retailers, they've been facing challenges in recent years.
They've been grappling with the rise of e-commerce, the changing preferences of consumers, and the competitive pressures from both online and offline rivals.
So what have they been doing to try and adapt?
Well, they've been investing heavily in their online presence.
Right. They're trying to provide a seamless shopping experience across all channels.
They are, and they've also been focusing on their loyalty program.
Loyalty programs can be a powerful tool.
They can.
What else have they been doing?
They've also been experimenting with new store formats, and they've been adding more experiential elements to their stores.
So they're trying to differentiate themselves from the competition.
They are now, despite these efforts, Nordstrom still faces some significant challenges.
Like what?
Well, one challenge is the changing demographics of their customer base.
Yeah, millennials and Gen Z have different shopping habits.
They do, and they're more likely to shop online and are more price sensitive.
So Nordstrom needs to adapt its marketing and merchandising strategies.
They do. Another challenge is the rise of luxury e-commerce.
So Nordstrom is facing competition from both online and offline players.
They are, and they need to find ways to differentiate themselves.
Now let's dive into the key metrics that investors should be watching in Nordstrom's upcoming earnings report.
Okay, first and foremost, we're looking at earnings per share, or EPS.
Right. And along with EPS, we're looking at revenue growth.
Exactly. Then we've got comparable sales or same-store sales.
And to gauge their digital progress, we're focusing on online sales growth.
Those are key questions. And to assess their operational efficiency, pay attention to gross margin and inventory turnover.
And lastly, let's not forget about guidance.
Exactly. Now, what are some specific things that could impact Nordstrom's stock price after the earnings report?
Well, if they deliver strong earnings, beat expectations, and provide a positive outlook, it could signal to the market that their strategic initiatives are paying off.
Right, that could boost investor confidence.
But if they miss earnings estimates, report weak sales, or express concerns about the future, investors might lose faith.
It could. Now, in addition to the financial metrics, any news about strategic initiatives or partnerships could also move the stock.
For example, if they announce a major new partnership with a popular designer brand.
Exactly. And conversely, any negative news like store closures or executive departures could have the opposite effect.
And then there's always the broader market environment to consider.
Absolutely. It's a complex equation with many variables at play.
Great insights. Well, folks, we've covered a lot of ground today, diving deep into 5 companies with earnings reports on the horizon.
It's going to be an exciting week.
It sure will be. But before we get swept away by the earnings frenzy, let's take a step back and remember that investing always involves risks.
That's a crucial point. Past performance is never a guarantee of future returns.
Exactly. So don't let those flashy headlines or optimistic projections cloud your judgment.
Wise words. It's all about making informed decisions that align with your individual financial goals.
Absolutely. Well, that wraps up our discussion of these 5 companies poised to make waves in the market next week.
We've covered a lot of ground, from gold mines to lingerie, from department stores to teen fashion.
It sure does, and it highlights the importance of staying informed.
Knowledge is power when it comes to investing.
Couldn't have said it better myself now before we sign off. I want to remind everyone that the content we've discussed is for informational purposes only and does not constitute financial advice.
Always do your own research, folks, and make decisions that align with your individual financial goals and risk tolerance.
And with that, we've reached the end of our show.
It's been a pleasure exploring these companies and sharing our insights with you.
If you enjoyed this episode, be sure to subscribe to Investing Talk Podcast and leave us a comment with your thoughts or suggestions for future topics.
And don't forget to share it with your fellow investors. Spread the knowledge and help empower others on their financial journey.
Until next time, happy investing, everyone. It sure will be. But, before we get swept away by the earnings frenzy, let's take a step back and remember that investing always involves risks.
Absolutely. Past performance is never a guarantee of future return.
Exactly. Don't let those headlines cloud your judgment. Do your research. Consider your risk tolerance.
And, consult with a financial advisor if needed.
Wise words. Well, that wraps up our look at these 5 companies that have earnings releases next week.
It's going to be an exciting week.
It is, and we'll be back next time to break down the results and, see how these companies performed.
Definitely.
So until then, stay tuned for more insightful discussions on Investing Talk Podcast.
And don't forget to subscribe, share this episode with your fellow investors, and leave us a comment with your thoughts or suggestions for future topics.
We appreciate you joining us on this investing journey.